Week 25 is here, and you are listening to the Stock Investor Tools podcast, Trading Tips with Jim. Last week, I thought we could see the start of the red wave for Nasdaq. Never happened. Nasdaq up 3.25% last week to 17,689. The advance of Nasdaq was fueled by the CPI numbers. Just like I told you, they would affect the market. And CPI, or inflation, came in just a little under expectation, and that was enough to rocket fuel the market, leaving, as I said, for a very green end for Nasdaq. Dow Jones, however, fell by 0.54%. And despite Nasdaq leaving very green numbers, most companies actually fell. Last week, more than 64% of all companies actually returned red from Monday to Friday. The upturn was mainly driven by the big players, as it has been for a long time at Nasdaq now. And that leaves us at a situation where currently there is only 15% buy signals at Nasdaq. This low we haven't seen for a long time. I think that might be our opportunity. I will get back to a little bit later. And in the $1,000 challenge, as you know, I have faith. And in last week's podcast, I told you that I think it would be the last week for faith. I was not sure it would do any good. If it would be a green push, it should do a little bit, and it did. On the same day, Wednesday, I believe, it pushed upwards to 14.19% on a very, very strong opening, starting to fall back at trailing stop loss at 5%. And faith was cut at $3.98, leaving 11.48% profit for me. More about that at the end of the podcast, as I will tell you which new stock I think that I will buy today. Currently, the $1,000 has grown to $3,365. That's the amount I will put into the next ticket at the end of the podcast. Remember to like, remember to subscribe if you haven't, and if you're missing the video of me, well, it will be back on next week. So for this week, you just have to enjoy the audio version. Still up on YouTube, but only in audio. Back to the market. Market, as I said, they went green last week. Very, very volatile as expected. Moving a lot up and down. It's a perfect market for traders where you can put your positions and over a few minutes just make huge advantages. And it will be the same this week. It will be a volatile market. I think this volatile market will stay for a little bit longer before it starts to settle. And the most interesting thing in my perspective is if we are settled for a upturn or we are just juggling at the top. Everything now reminds me of a possible bull rally coming up. I told you this before. Nasdaq can just easily go straight up to 20,000. Before having a correction, or it can correct here. Right now, well, as Nasdaq had a very good week, indicates that it might just push upwards. And I started this podcast saying that there was only 15% buy signals at Nasdaq. And to get a little deeper into this number, so what are we measuring? We are measuring the amount of stocks that are giving buy, hold, or sell signals. If one of the items get too low, let's say that the buy signals get too low, we know that the market usually will turn. This is just the same like relative strength index or any other momentum indicators. At the same time, when getting very low, we know that volatility will increase, and we do know that a fall can be even harder. And sadly, many of you have experienced this. You see Nasdaq go up, but your stock is going down. As I said, most companies actually fell last week, which they have been for several weeks, actually since the beginning of May. We are in the what I believe to be the 6th, maybe the 7th week, where the general amount of stocks are falling. The upturn is driven by the bigger one, especially nvidia. But 15% is the place where we again can ignite issues. Usually, when we are this low, I say, oh, no, it's a good time to buy and have that feeling that for certain stocks, there should be an upturn coming. And looking at charts, I can tell that many of the stocks are at the lower end of their trend, usually offering a buying opportunity. And if talking about charts, if you look at lots and lots and lots of charts, you will see that most of them actually are in a downtrend. This is something that has been developing for a long time. And again, as I said, we see markets go up. It's mainly driven by the really big players pushing the market up. The good and the bad, if you are in one of the stocks that's been falling, is that very soon you should have your opportunity, because money, they will always push where they think is the best return. And the best return has been in AI, as we know, and a few others. But eventually, when they think the risk is getting too high, they will start to chase stocks where they see a potential upside. The $1,000 challenge at the end of the podcast, I found one stock which I think, have we traded it before? That can do actually that, be a place where people think there is an upside, the professional ones. And we know that when the professional one starts to pick up, usually the market will follow. When they start to sell, they sell a little bit for you. Usually the stock or the market turned down. If you look at New York Stock Exchange, you have 18% buy signal down from 25 last week, and the week before that, in week 23, we know that we had 2 lean weeks, so week 23 was actually 41. So again, as I said, it was 41% buy signals 2 weeks ago at Nasdaq's at the New York Stock Exchange, and still amount of buy signals been falling. And you may wonder, so how do we figure out what is a sell or what is a buy at stockinvest.us? We do that by technical analysis. We analyze all the stocks very, very thoroughly, put it to an algorithm which I developed many, many years ago. Actually, we have to go back to 2002 upwards to 2012. I was developing these algorithms. Later, we have refined them, and more and better algorithms are coming soon. And these algorithms, they just look at all possible things like trend, like RSI, like volume, and a few other things. And based on this, it gives it a ranking. And you can go and check yourself, find the stock. We are totally open, transparent about what you do, so you can see how much return the stock has been giving for the general signal that it has. So having buy signal since, and the return since the buy signal was issued, or the same for sell or hold. And we are in most cases correct. I'm very happy to say that. Of course, there will be cases where we are not correct. You cannot control everything. And there is only a certain amount of things that you can understand from the technical part. News always changes things. Last week, it was the inflation numbers pushing the market. This week, it will be not so much. The eyes are on the unemployment numbers. And unemployment numbers, people applying for unemployment, went up last week, so-called jobless claims. And they are expected to continue. What we see in general in the economy is the following. Unemployment is rising. It was up from 3.6. Now it is at 4. The claims are increasing, the wages are stagnating, the buying power are stagnating. People are not able to pay off their credit card debt. More and more people fall off. This is the money flow that we are talking about here. So where will all the money that will push the market forward be? They are not in your bank account. That is for sure. If you're just an average user, most of you are already struggling because of inflation and everything else that is going on. So your buying power is not going up. But there is a lot and a lot of assets which has been put outside market as interest rates go up, because we know interest rates go up, then market usually struggle because you get more money in the bank. And if now interest rates signal that they will start to fall. We know that last year they were saying, oh, they will start to fall from early this year. Hasn't happened. Now there is expected one interest rates cut by the end of the year. But if interest rates starts to cut, money will flow back to the market. All the assets that has been put into different items can suddenly start to push into the market. They will hunt the stocks which you just mentioned that has been bombarded on a strong downturn for more than 7 weeks. Some of them actually for more than a year or two will be picked up, considered, and can give them a huge push upwards. While some of these stocks, which already are very highly priced, uh, might not do as good. So I personally think that we are in for a potential new wave, but this wave will be for the broader market and not so much for the narrow market. Given the condition, the following condition, that we see cooling in the inflation. That's the one thing that will determine how these things will go. What we have seen is that a lot of things are somewhat stable. The buying power, as I just mentioned, is slowing down, putting less pressure on the economy. Logistics, everything are back to more or less normal. We had this issue back in 20 and 21, so these are more or less. But the big thing is still all the warmongering going on. NATO had a so-called peace conference. It was more a war conference, and if they continue to push the line, now we know that Russia has offered a peace deal, and they seemingly are not interested in discussing it, but continue to wage war. That might push Russia to do something. So we're still in a situation where we can have escalation. Middle East somewhat quiet with Israel and all these things, but all of these things are brewing. When we start to get used to it, very, very often bad things start to happen. If bad things start to happen, we will see prices increase rapidly on especially energy. Energy will push everything, meaning that I am bullish to oil and bullish to war. I have been that for years, told you that before, telling you again. Oil, war, super places to have a part of your portfolio. Looking at oil, oil is up by $2.5 since last week, currently at $79. We also know that US have to fill up their strategic reserves after Biden emptied whatever was left of it. They have a long, long way. They will start to brag about how smart it was to sell oil at high prices, but the average sell price is much lower than what they say in media. Now they will have to refill storage. That will come at a cost. Keep the pressure on energy prices. So I personally think oil is one of the places where you still can make a lot of money, and energy, as I said, will determine how inflation really will go. It's getting harder and harder to print money. It's harder to sell all the debt. We see this across things. A lot of things is happening in BRICS. I will not get too much into this now. But BRICS are forming. This is a word that you just have to get used to, a terminology. BRICS. BRICS countries is the opposite of the West countries. It's Brazil, Russia, India, Saudi Arabia, and a few others. They formed an alliance. This alliance is growing stronger and stronger. Saudi Arabia is, for instance, have not yet signed a renewal of the agreement where oil is trading in dollars, and they are talking about moving totally away from this. The yuan is growing much stronger. All the sanctions, all these things for Russia, which I told you years ago how they will backfire, they are coming to fruition now. Everything that I said turned out to be true. How it will backfire, what will happen, we see it all play out in full display now. And yuan is growing stronger. BRICS are growing stronger. It will be a problem that has to be solved, and maybe that only can be solved by raging wars. We will see. But war industry, everything just tells the same story. That war industry is absolutely nice place to be. Several of them are high dividend payers, and they will pay even higher dividends as tax money is poured in to generating ammo in the wars that we see and all the deliveries, especially to Ukraine. So that was a huge sales pitch. Why stay in war? It's moral, ethical, totally awful. I wish I could say otherwise, but you listen to this podcast with one aim: it's to gain more green in your bank account. And so far, war industry has been a good place. And I think oil will remain a good place. Gold, which you know I love, was up $30 last week to 2,336. I think there will be more upside in gold. Been in gold since 1,600. That was when I started to tell you to get into gold. I think gold again will feel more pressure pushing upwards, meaning that gold stocks as well is a place that you want to be. 10-year treasury yield is another thing that we used to follow and been following on off for a long time. If this one goes down, you can expect market to go up. If it goes up, you can expect market to go down. Last week it fell by 0.2 or 5.23% to 421. Market, as I said, went up. It's a good thing that this one goes down. I think it will stay a little low for some time because of the latest news. There will be some time before we get more economic data. So we are in this phase where it will be a little silent. But again, good number. Wrapping up about buy and sell signals across the world. I will let you know what I think will happen in the market the week ahead of us, and we will rush to the $1,000 challenge. And getting back to the signals, so I told you that Nasdaq only has 15% buy signals, New York Stock Exchange 18% buy signals, London or Frankfurt is also very low at 22-23%. All of them has been falling. One which has been going up is Tokyo, Japan, which is up from 28 to 39%. So it's been a good place to be in Tokyo lately. Just in China remain very low. China is struggling with a few things. So very interesting to follow China and see how they will deal with things. For the week ahead of us, not much numbers. Most of the numbers, there will be some numbers on Wednesday, and then there will be some work numbers on Thursday, but it's more or less the work numbers that is very interesting now to see how fast the economy is cooling off, because suddenly unemployment rate can just skyrocket, and that is not good either, because buying power goes down means the profit margins go down. We've been to all these talk. I told you what will happen in Q3, Q4 about quarter results. We will get back to that later. It's still a little bit ahead of us. So for the week ahead of us, well, market was up a lot last week. I thought it could see the top, hold off, go a little red. Was wrong about that, driven by nvidia again. For the week ahead of us is equally good chance that it will be just as good week as last week. My argument for why it might be a good week is because I think all the stocks that have been hammered lately will start to pick up. That can fuel further upturn. No really big news. It's a good place to be. The one thing that you should watch out for is Ukraine. And what I want you to pay attention to is that now Russia has offered a peace deal. The peace meeting was further war declaration. Russia has to deal with this somehow in some sort of response. We know that they've already been sending more ships around, putting up the pressure. Someone has at some point to give in a little bit. A few countries actually argued very wisely that at least start negotiations. That's a good thing. If we suddenly get into negotiations and we can get an end to this, there might be an upturn we haven't seen in the market for an extreme long time, as it will boost economies around the world heavily if we get back to the normal, usual way. If not, we are still heading for the worst possible outcome. It is still very highly likely scenario that these things will just escalate further. Enough about that. For the weekend was actually, I do not know. Will it be a green or will it be a red? All I know is it will be very volatile up and down. You can trade and make the argument I used last week. Be patient, be solid, wait for when it is absolutely low, when there is a slight panic during the day, when it's too low, minus 1.5%, 2%. Typical good buying position intraday. If it gets too high, a 1-2% up. Typical sell position. I'm talking about Nasdaq. You will have to watch the stocks individually. 20 minutes into the podcast, this time only on audio. Could have put on the video, but wouldn't be any nice view as I'm away from my ordinary podcast room. So I have to do this where I am, and better to have it done than not have it done. And I know many of you have been waiting for the $1,000 challenge. I know a lot of you are following me step by step. I urge you to make your own decision. I'm just showing you how I do it. This is a very, very high risk portfolio where we go into stocks that I expect to move very, very fast. Or with high upturn. Sometimes they move fast during just a week, to a few hours. Sometimes they go in for some weeks. Fate been in our portfolio for, I think it was 3 weeks before it went out last week. Happened on Wednesday, I believe. Opening very, very hard, up, straight up in 419, up almost 10% in a day, then starting to fall back. I have trading stop loss, had it at 5%, and when it fell under 4, hitting 398, it was cut by stop loss. Yes, I could have made more money, but as I told you, you do not know exactly where it goes. I was actually in belief that I would not get much out of Fate, so I got additional 6%. Very happy about that. Super happy. The Fate Therapeutics trade ended with 11.48%. As I said, I have $3,365.52. That is one that was left after that trade. And this money I plan to try continue to grow as I want to grow much faster, celebrate our second doubling, etc., etc. Which stock will I buy this week? I was looking at stocks. I couldn't find any stocks that I really wanted. PepsiCo looks to me like an obvious buy, but 3 to 5% upside, and 3 to 5% upside if you are a small, if you have a small portfolio. Let's say that you are only playing around with $100, $200, whatever you are playing around with. Then and you have to pay commission. So then you cannot manage any profit from 3%. I can manage because I have a good account at Interactive Brokers. I can easily make very good money on 3%, and 3% is actually super good because it's a little better than you get in the bank during the year. So making 3% in a few days would be absolutely perfect. But for this portfolio where I'm hiring heavy risk, I want to do it, but I know it will be a little bit slow for many of you. And I was just keep looking, but PepsiCo, in my eyes, PAP looks very good, and even for leverage trading, I think the risk reward is very good, meaning that it's little downside, potential upside. And if you are clever with your options, make sure that you play only with money that you can win. I think there is a potential good upside to make a few bucks in PepsiCo during the week. Has all the classic signs of good. Now, to all podcasts, I argued a little bit. I told you buy signals was very low, and I think that the second followers will come. And I was watching the market, I couldn't find anything. And the one candidate which I ended at is not even at a position where I think it is an obvious buy. So this one again comes with a little twist, and you should try to understand that here the risk is higher than in most times of the portfolio, especially short term. So far, if you like the podcast, remember to like it, remember to subscribe, and tell a friend so I can keep giving you the same podcast for the weeks to come and the years to come. This week, I want to go into NIO. And just to give you a short overview, NIO, in we look at short term, 3 months or more, is within a rising trend. And I expect it will continue within a rising trend. But looking at the very short term picture, it is still showing high likelihood of falling down all the way to $4. Why? Why then Neo? Well, it's because it has. I think it has all the classic earmarks and upturn. When it finds the bottom can be today. The bottom can be 7% further down, around 4. Let's say 410 or something. That would be a super good buy. From the chart, from what I read, if we look forward and we look longer forward, I think that NIO has the huge potential of going up to 8, 9, even $10. As I argued over this podcast series a long time ago, I've been buying up EV as they've been falling, not knowing where the bottom is, because when that tide turn, I want to be. So I've been buying in slight portions into EV, higher prices than current levels, because I want to fulfill my position. I did the same thing when the markets were falling in the beginning of COVID. I told you this will be a lifetime opportunity. I didn't know exactly where the bottom was. I just started to buy. And looking at it, I had 3 big buys, 3 series of big buys. I hit a perfectly nice average. I've been doing somewhat the same of EV, and I think EVs will have their return. You have to be a little bit strict where to go in. I think Tesla is a better choice than NIO, for instance, especially after Musk got his deal. But I think EV will come. Will it come this week? Not sure about it, but it was looking at so many charts. We are looking to make money fast, having a huge upside. Sadly, this has a downside as well. But currently, I think the downside is 7%. That's way higher if you listen. PepsiCo, as I said, looks to me like hardly no downside, but 3 to 5% short-term upside. NIO, when if it turns, it will probably do a very, very fast turn, but it has to turn. We will have to see that in the volume. That will be the telltale when you start to see volume really picking up. RSI been low for a very long time. You've been falling back. Volume is also very low. We are somewhere. Maybe it will be 419 where it turns. I don't know. What I will try to do is get it as cheap as I can today. Because that's the thing with this portfolio. I tell you, then I do it. There is a high chance there will be a better buying position during the week. I tell you, the lower, if we look strictly technical like at it, and we want to be very strict, I would rather trade NIO around 410. If we get down there, it will be a perfect situation. Will not have any doubt in my mind getting in to NIO. But I tell you what I will do. I do it. I will during the day, probably during the first hour, I will buy NIO. I will post it on the YouTube at which level I buy, knowing that I might hit off a little bit. I will go in with all $3,365.52. Hopefully, when we will get back next week, it will be way better off. I'm not sure about it. But again, it was one of the best. I think the tide will turn, but exactly when will it turn? If I knew exactly, I would be the ultimate guide to go to. The profit of everything, and it would flow money everywhere. But me, like everyone else, just have to guess. My guess is that we are somewhere close. Exactly when, I do not know. NIO, NIO, will be the $1,000 challenge trade. For this week, I will go fully in. To be honest, I'm not sure. I would prefer to go in around 4, but this is the challenge. This is the one thing I do. I go in, I buy it the same day. I give you the advice before I do it, actually do it, so you can follow the trade, and we will see how it goes. And that, my friends, was this week's podcast. I hope you enjoyed it. I hope more than anything that you had a good last week. And that this week, at the end of the week, your portfolio will be a lot greener than in the beginning of the week. And of course, I hope we will be back next week. Until then, just have a super trading week. Bye.
Welcome to StockInvest.US Stock Analysis. We remind you that trading involves a high risk of losing money, and that you should speak with a financial advisor before buying or selling any securities. You should not base your investment decision upon StockInvest.US. By using the information, you agree and are held liable for your own investment decisions.